All right. Today we're gonna do something a little fun, a little different. So I actually want to get your guys' feedback on this stuff. But what we're gonna do is we're gonna look at one of the most traditional assets ever for generating and maintaining wealth, and compare that to a Bitcoin / MSTY strategy. Okay. So real estate is one of the oldest forms of capital that there is, and it's a very common way for people to store wealth. Okay, and here's the thing with real estate, there's two real main functions, right? One of them is you're generating cash flow, okay, so you're generating income, and the second one is you have appreciation, and you have appreciation through a few different forms. You have, and we'll get into all those, but at the highest level, those are the main two things. You generate income and you generate cash flow. I'm sorry, you generate income and you generate appreciation. Bitcoin can sometimes get the negative view that, well, hey, it appreciates, but it doesn't generate income. Well, with some of the tools and innovations that have been happening in the marketplace, there are options where Bitcoin-backed assets can generate income. And the one we're going to be looking at today is MSTY, MicroStrategy's, where they do call options, and it creates yield, okay? And we'll get into those details, but what we're going to take a look at is we're going to go head-to-head for a traditional real estate asset compared to a blend of MSTY and Bitcoin to see if the income and appreciation can offset the two and see who the head-to-head winner is. So what we're going to do is I'm trying something a little different. There's been feedback that people like to see more visuals. So we're going to give her a go. All right, real estate versus Bitcoin plus MSTY investment showdown. Okay, so let's dive into this. So what we're going to do is we're going to take a look at one of the traditional approaches. So what I'm going to do is I'm going to say we're going to buy a duplex or 4-unit, let's call it a 4-unit, a multifamily property in the Midwest. And what we're going to do is we're going to take a look at what those returns are, because this is going to be the baseline that we're going to compare against, okay? So again, these numbers are directionally correct. I get it. They may not be exact. Each area is different, etc., etc. Okay, so just bear with me on, are these being directionally correct? So I've been investing in real estate for a decade now, so some of these numbers are accurate to where I'm at, but hey, it's different everywhere. So here's what we're going to take a look at. Cash on cash return, let's say, is about 9%. Again, different for everybody. Let's say 9%. That takes into consideration repairs, maintenance, all that kind of stuff. So we're going to look at 9% cash on cash return. Then we're going to look at a 3% principal pay down. So while you own the rental property, the tenants are paying you rent, in a portion, and that rent should cover the mortgage. Well, there's principal pay down built into the mortgage. You're getting that as a benefit because the tenants are making that payment through their rent. Then we're going to go with 3% appreciation. I know the market's been hotter, but we're just going to look at traditional longer term things at a 3% appreciation. Total return is about 15%. This is outperforming the S&P 500. That's why people move into it. Yes, there's more headaches. This is more active than just buying an index fund in SPY or Triple Q or whatever you want. So you should get a bigger return, a better return. And historically, the stock market's between 9 to 10%. And here we're saying, hey, we're going to be looking at about 15%, and it could be more. There are benefits to real estate, right? You have several different levers to pull. One of them is leverage. You can go out there and buy a $400,000 piece of property with $100,000 down, right? So that would be 25% down payment. That's pretty common. We're going to use $100,000 down payment as the baseline here, just because it's easy math, which will get you a $400,000 property. Leverage is good. You also, like I mentioned, you have principal pay down. where the tenants are paying that down, so you're getting that benefit. You've got the appreciation of the asset itself. You do have depreciation of the asset on your taxes, and then you got tax write-offs, right? So there are benefits, and that's why real estate has been good for hundreds, if not thousands of years. However, Bitcoin has come to the market, and that's something that we really need to consider. This is something newer, and this is why strategies are going to potentially evolve and change across the marketplace, and Bitcoin could start to eat some of these returns. So what we're going to start looking at is MSTY. The reason I bring up MSTY is because one of the things with real estate, the benefit is the income, the cash flow. Bitcoin does not have that. However, MicroStrategy or strategy does have MSTY, which is a yield producing solution. In the way that they do it is it's covered calls, and they do it on your behalf. Okay. Here's the interesting thing. The trailing 12 dividend yield has been like 130%. What? The reason I say that is the stock market, the bond market, you're looking at 2, 3, 4%. You put this into a high yield, your money market account, you're looking at 3, 4%. So this is infinitely times more productive than those assets, right? That's why I want to look at that, because that's pretty unique. Now, I don't believe this is sustainable, but hey, this is what's happening today. You can always pivot. These are highly liquid assets. So let's just operate off of that understanding right now. Strategy, right calls on call options on MicroStrategy shares. We've explained that. Right now, the share price is about $21, and the last dividend was, I believe, in June. They got paid out in June. Was $1.47 a share, I believe, and I believe the month before that was about $2.36 or something like that, right? You can all look this stuff up. The concern here is it sustainable? It's dependent on MSTR volatility. Do we believe that MSTR is going to continue to be volatile? You're going to get into the price of the equity. It's gonna go down over time, but at the same time, this is kind of a crazy thing. So I'm not saying that this is the longest term thing. You're gonna do this for the next decade, but this is an option in the near term that's very interesting. I think there's going to continue to be more and more options on the market that will be of interest, that are going to compete against traditional assets like real estate. Significant month-to-month distribution changes. Okay, cool. But at the same time, you can have significant month-to-month changes in your cash flow depending on what CapEx or repairs and maintenance you have as well. So there you go. So we're going to look at MSTY as the income generating piece of this puzzle. We do have obviously Bitcoin that's going to compete against real estate in the appreciation phase. So what I did is I took a look at a 5-year performance comparison. Now here's the deal. This was looking at about a 9% cash flow, okay, over the 5 years. And I kept the math simple. I didn't have this kind of ratcheting up with rent appreciation, blah, blah, right? I'm just saying, hey, rent appreciation goes up by 3%, your taxes go up by 3%, your insurance, I just wanted to make it simple, right? So simple math, we just run it across the board. So you're looking at cash flow of $45,000. 5-year appreciation, so you're taking $400,000, you're appreciating that by 3%, along with the equity appreciation. So you get all that stuff, right? It comes into a total gain of $168,000. MSTY, what I did is I said, hey, how much MSTY do we need to purchase to generate $45,000 in cash flow? And then the rest of that gets invested back into Bitcoin. I don't have the numbers in front of me, but I believe I ran the appreciation of Bitcoin at 32%, because that's kind of been the historical number. And so what you're looking at is you're not giving up any cash flow. You're creating the same amount of cash flow. And this is using that $100,000, right? Generating the same amount of cash flow. The appreciation is substantially higher with Bitcoin. These are fully liquid assets. And there you go. You get a substantially higher, almost $200,000 more gain in those 5 years, and you have very little headache. You got to be able to handle some volatility, but you don't have headaches of tenants, toilets, and taxes, right? So the investment strategy comparison, real estate, stable cash flow, less volatility, there's tax advantages, it's a tangible asset, inflation hedge, leverage benefits. MSTY and Bitcoin, higher potential returns. We're looking at 9% cash on cash compared to MSTY, 130%, substantially higher. We're looking at real estate appreciation of 3%. We're looking at Bitcoin appreciation at 30% plus, okay? So these are substantially higher. You are more liquid. In order to sell a property, you have to get it prepped. You got to get pictures taken. You got to list it. You got to negotiate. You got to go through that whole process. You got to close. If you want to be liquid and sell your assets, MSTY or Bitcoin, you literally log into your brokerage account or wherever you're holding it, and you sell the asset, and it's good to go. Fully passive, no tenants, no toilets, no taxes. You're free in the mind, no property management. Bitcoin's growth potential, freedom, and flexibility. I like the last one, freedom and flexibility. You can move, you can do whatever you want, all that kind of stuff. So, based on the numbers and what you need in life, these are things to take into consideration. Okay. Now, Bitcoin's potential is absolutely huge, and we've got a lot of tailwinds behind us, right? The cash flow solution is MSTY, okay? The freedom and liquidity, and then we got the macro talent. So here's the thing. What I did is I really wanted to get aggressive with this, okay? So I said over 10 years, and in this instance, okay, what I did, for whatever reason, I used 120,000 as the baseline, whatever, it doesn't matter. I said, let's take the current return. So let's operate off 130%. And let's operate off of, I believe it was 32% CAGR for Bitcoin. Okay. And then I said, let's get brutal with this and say there's a 20% return degradation of both Bitcoin and of MSTY, okay? And then I said, run this over 10 years, right? So we ran the calculation, and what it came out to is, I'm pulling up the exact data here. What we look at is, or I'm looking at this is going year by year. It says you come out way ahead. Oh, here we go. You come out way ahead with Bitcoin and MSTY with those degradations. It would take you, get this, it would take you 40 years to get to the point where real estate would come out ahead. This is assuming real estate continues to operate at 9% cash on cash, 3% appreciation, 3%, what was the other piece? The principal pay down, all of those to the benefit. And then we said Bitcoin and MSTY are going to be degradation of 20% every single year. It would take, get this, 40 years before that real estate investment outperforms Bitcoin and MSTY. That's wild. I mean, the runway on these things is wild. So that's getting really, really conservative on these numbers. Now, one of the things that I took a look at is, all right, what is the run rate to get competitive with, to get kind of that break-even point with Bitcoin over, let's say, a 5-year span. Now, what you'd have to do is, and this is assuming that the cash flow, MSTY cash flow, stays about the same, or degrades just a little bit. But what is the break-even point? And the break-even point was a 17.5% CAGR year over year that Bitcoin would have to drop to in order for those two to be equal over that time frame. So let me see if we can pull up. I'm gonna go to something real quick, and I'm gonna take a look at annual CAGR Bitcoin year over year. Okay, So what we're going to do is we're going to take a look at, and there's a few different resources out there. But here we go. This is the one we're going to pull up. So we're going to say, is this even realistic that we could expect Bitcoin to drop that low over that period of time? Okay. So what I'm going to do is I'm going to pull this over. Okay. Now what this is the Bitcoin CAGR. This is a BitBo resource. And what we're looking at here is the current price in the orange. And then let's look at the CAGR for 4 years, okay? And so if you go, so you can see these were crazy high, 120, blah, 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 blah. And we start dropping, right? Because there's going to be greater adoption. There's not going to be as much volatility. The price is higher. We're still well above that 30 or 40%, right? Still above the 30. We drop all the, okay, so I mean, look at this. We haven't come anywhere near 17% over a 4-year time span, okay? Now, let's go a step further. There is a point in time right here, we're getting close to it, okay? And this is recently, and you can see here, we actually did drop at the very lowest to about 9.3%. Oh, look at that, 7.4%, 7.3%, okay? And that was going 4 years back from 4/20/2025, okay? Now, let's just take a pause. So, during that time zone, you would have been better off holding the real estate. Now, let's take a look at how it's performed. We have quickly gotten back above the 20% mark, okay? And look at this. We are climbing higher and higher and higher. So this is interesting. There is a brief window, but you can see over the history of Bitcoin, we have crossed that line for a span, let's see here. So from 216.25, okay, to about 5/12. So about 3 months. There was a 3-month period over the last 10 years in which real estate would potentially have outperformed a MSTY and Bitcoin combination. But really outside of that, it is absolutely dominated. And here's the thing. We're just coming into the the peak of the bull market. So I expected these numbers to go up. All I'm saying is real estate has been traditionally a great asset to hold and control wealth. We are getting to a point in time where it may be worth looking at different solutions to generate income and to generate appreciation that can outpace real estate with a lot fewer headaches, a lot fewer concerns. All right, the math behind BTC growth. Real estate, blah, 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 over 5 years. Required Bitcoin performance, 80K in Bitcoin needs to grow 179,000 to match real estate. 17.6% CAGR, we talked about that, below Bitcoin's historical 25%, so there's a buffer. That's what's interesting about this play. There might be brief instances based on where we are in the 4-year cycle where you may break even or real estate might jump ahead briefly, but 90% of the time, the numbers say that you're better off in this capacity. So, final decision framework. Choose real estate if you want stable cash flow with less, I'm not going to say drama, I'm going to say with less volatility. Because there's a heck of a lot more drama in owning real estate with working with tenants, working with property repairs, working with taxes, working with the city, like working with anybody, right? Bitcoin, you just buy it and you let it hold. Value tax shelters and inflation protection, that is a benefit there. Prefer tangible, controllable investments. Plan for 40+ year horizons. You can do that, okay? Choose MSTY. You can easily, in order to generate a 9%, okay, cash on cash return, all right? Let's do some quick math here. What I want to do is, we're just going to take a look at this. So actually, I'm going to get real conservative, and I'm going to say the most recent, we're going to get real conservative here, okay? In order to generate that 9% cash on cash, we're looking at real estate of $100,000. in order to do that. Now, let's say that, let's get real conservative and say that instead of 130%, and I know it was 140% recently for MSTY, but I'm going to go with 130% because they had a little lower dividend recently. Let's say it drops all the way down to 65% return. How much capital is needed to generate a 9K return from an asset that performs at 65% return? Let's take a look at this real quick, and we're gonna figure this out. So you need $13,000, okay? So from real estate, you needed $100,000 in order to generate $9,000 in returns. This is being hyper conservative. You need about $14,000 invested in MSTY to generate the same amount of cash flow as the real estate. Then you invest the difference into Bitcoin for the appreciation play, so you're giving up no cash flow. Yeah, you're gonna have a little bit more of a tax burden, so maybe you make it 20 grand, right? So that can pay the tax difference, whatever. There's still a substantial amount left for you to invest in Bitcoin, and the hurdle rate for real estate is, let's say, 3 to 4% appreciation. Let's call it 6% if we put in depreciation or principal pay down as well. Bitcoin has been operating at 25, 30% plus. So you've got a tremendous runway. So choose MSTY if you accept volatility for higher upside. You want liquidity, no landlord headaches. You believe in Bitcoin's long-term potential, and you focus on, and I get this 5 to 30 year. I'm actually going to say shorter term just because MSTY, there could be degradation in the stock price. That we could get a little more stability in the price, and all of a sudden those dividend checks. I'm just going to say real estate is that you could do it from the age of 25 to 65. It's a 40-year play. It's going to be slow. It'll be steady. Bitcoin, you can generate financial freedom much more quickly with volatility, and I believe that Bitcoin itself is absolutely a 40 or 100-year play. I'm going to say MSTY, you need to be a little flexible and watch that one. I fully don't know how it's going to perform coming up because we don't know how Bitcoin or MSTR is going to perform. So just be a little mindful about that. But from a near-term play, you can create the same or more cash flow with substantially less capital. And then you got Bitcoin being the power horse doing the rest. So key considerations, your risk tolerance and time horizon should drive this decision. Both strategies can build wealth effectively. Diversification isn't always bad, but if you want full-on freedom and full-on liquidity, you know what the play is there. Hopefully this was entertaining. Hopefully this was educational. Like and subscribe below. Let me know, do you like these visuals? And let me know if you got any questions about this or your thoughts on holding real estate and MSTY/Bitcoin play, or any other strategies that are coming to mind that you think could be beneficial from a income and appreciation standpoint. Love to hear the thoughts. Love a little debate. Keep us posted. Stack those sats. Stay sovereign. Enjoy.